Hello everyone, welcome to the ichimokucharts.com hourly analysis for the S&P 500 for Tuesday, March the 15th, 2011. Well, a very exciting first hour of trading today, and we have this market making a very large red body candle in that first hour of trading. The market actually gapped down at the open and traded right through a potential area of support at around 1277. The very large bearish candle actually found support at roughly about 1262, which was a previous area of support. And if I just pan out, we can see here that that area of support was the area that we defined quite some time ago as a rectangle pattern, and the market was previously trending up very strongly and formed this rectangle pattern where the market tested on 3 occasions to find support at that level, and that level has actually held in that first hour of trading, and the market has bounced substantially off that level. So it just highlights how important some of these older areas of support and resistance, especially those that occur in consolidation areas, how important they are to markets, and it's acted as a very strong level for this market. The market in the following hours of trading rallied in the first time frame uptrend. In all of that time, we didn't have a change of trend to the downside. Very worrying way that the market rallied. However, the second hour of trading, we saw a fairly large green body candle telling us that the buyers had taken control, and they made some net bullish progress. But the following hours of trading were all on very small body candles. Now, the final hour of trading, we actually had a small body at the bottom of this fairly large shadow, and the large shadow actually traded right to the opening price, and found resistance at the window that's now been opened. So this gap between the previous low of the previous last hour of trading and the high of the first hour of trading today is the area that we call the window that markets gap down, and in Ichimoku charts term and Japanese candlestick terms, they offer themselves as areas of support and resistance. And in this case, we can see that the market has found resistance at that area. As the market traded exactly to that area, the sellers came in, and the buyers had lost the commitment that they had while they were trading up around the level there. A little bit worrying, this candle. We actually had the buyers losing commitment and the sellers taking control in that final hour of trading. So we do need to watch for a potential lower high and lower low in that first hour of trading when the market opens again. Now, if we do continue to the downside, obviously we need to watch this zone of support that we've highlighted at 1277 and this very important area of support around 1262 where the market was quite strongly bought back from. That will be very important to the market if the sell-off does continue. To the upside, however, we do have very strong resistance overhead, and that is really significant to this market. The market is trending down in the second time frame downtrend and has been for quite a few days, and we've highlighted that previously, where we're seeing the market make a series of lower peaks and lower troughs, and we can see that here. Nothing has changed in that regard. But the resistance overhead is very, very strong, and we're going to need a lot of momentum for this market to turn into a bullish market again. We have resistance offered first off by the Kijun-sen, and that's the pink line here, and we know that that will act as an area of support or resistance, and the market has tried to close up above there but failed. So a close up above there initially will be very important to this market when we begin trading tomorrow. We have the window that was opened. That will offer very strong resistance to this market. We have this swing high here at around 1298, which coincides roughly with this 1300 area. And the 1300 number is a big number for this market. It's a round number. And previously we saw that the market found support there and previously resistance. So that area will offer itself as very strong resistance for the market. Just above there, between 1302 roughly and 1306, we have another window that was opened on the previous day's trading. So that will offer itself as very strong resistance. We can see the area, the zone around 1310, 1309, where we had good downside price rejection. That will offer itself as resistance, certainly at 1312, and then around the cloud as well. And in Ichimoku charts terms, the cloud offers resistance too, so that extends from 1310 up to about 1314. So this market will need very, very strong momentum for it to turn back into a bullish market in the hourly time frame. Now, a bull market would be a solid bullish close up above the cloud here, so the market would have a long way to go before we trade up to around that level. So over the next trading day, we do need to watch these areas of resistance that we've highlighted. The market is bearish in overall Ichimoku charts terms and bearish in the medium-term time frame because we're trading down below the Kijun Sen. So a close up above those indicators would be bullish for the market, but strong resistance to overcome.